So if you read the article in Business Times at New Straits Times today, we stated that Malaysia's foreign portfolio outflow widened to 5.1 billion ringgit in January 2024, comparing to ringgit 1.9 billion in December 2023. So you may ask, what's the meaning of this and how it affects the Malaysian's economy, specifically its tourism industry? So in a simpler terms, the article is talking about how foreign investor, that means people from outside Malaysia, have been moving their money out of the country's financial market. So in January 2024, they took out a significant amount of money, selling off 5.1 billion ringgit worth of debt securities, which are basically loans to the governments or companies. And this was much higher compared to the previous month in December 2023, where they sold out 1.9 billion ringgit. So they took out 5.1 billion ringgit from Malaysia in January compared to 1.9 billion in December 2023. And you may ask, why foreign investors pull out their money out of Malaysia's financial markets? I'm not the expert. I don't have the right answer, but it may influence by a combinations of factors such as, number one, economics concerns. So foreign investors may become concerned about the economic stability of the country, such as high inflation rates, rising unemployment, or politically instability. These concerns could lead them to believe that their investment are at risk, and prompting them to sell off their assets and withdraw their funds. Number two, maybe global economic conditions, where global economic conditions can also play an important part. If there are widespread economies downturn or financial crisis in major economies, investors may opt to move their funds to safer havens or to allocate them to the market, which is much better growth prospect. Number three, it may cause of the interest rate changes. So changes in interest rates can influence the attractiveness of a country's financial asset. For instance, if a bank negara raise interest rates, it could make bonds and other fixed income investments more appealing. Conversely, if interest rates are lowered, investors may seek higher returns elsewhere in other parts of the world. Number four, it may cause of currency due to currency fluctuations. Fluctuations in exchange rates can impact the return of the foreign investor receive on their investments. If a country's currency depreciates significantly against other currency, it can erode the value of the foreign investors' holdings. Number five, maybe a profit taking. Sometimes foreign investors may simply just to decide to take profit or even cut losses to cash out their investments. This could be a part of strategy to rebalance their portfolio or reallocate their funds to other parts of the world or other investments opportunities. So all these may be the reason why. But the real question is how does this affect the Malaysian economy or even tourism industry? So on economics impact, when foreign investors pull out their money out of the country, it can affect the economy in several ways. Shah said it can lead to a decrease in the value of a currency, a country's currency, making imports more expensive. It can also lead to higher interest rates, which can affect borrowing costs for business or individuals. And additionally, it can signal a lack of confidence in the country's economic prospect, which may deter other investors to come in as well. So on tourism impact, foreign investment, specifically in the stock market, can also have indirect effect on other sectors of the economy, such as tourism. So if there is less foreign investment overall, it could mean less money flowing into the country, which can impact consumers' spending, including tourism-related activities like hotels, tour operators, tour activities, restaurants, and attractions. Now let's go deep dive on how can inbound tourism help the situations. So as you know, inbound tourism, which refers to tourists coming to Malaysia from other countries, can provide a much needed boost to the economy, especially during the times of economic uncertainty. These may include such as revenue generations. Inbound tourism bring foreign currency as tourists spend money on the accommodation, food, transportation, shoppings, and other services. This can help offset the outflow of the funds from the financial markets, contributing positively to the country's balance of payments. Diversifications, relying on the multiple sources of income, including tourism, can help diversify the economy and reduce its vulnerability to fluctuations in other sectors such as finance. So this means that even if a foreign investor are pulling out money from the financial market, revenue from tourism can provide some stability, huh? Job creations. Well, the tourism industry is the major or is a significant employer. So providing jobs directly or indirectly to many people in Malaysia. More tourists means more demand for services. More demand for services, I mean more jobs creations, and this will lead to income generations for locals. So guys, while fluctuations in foreign investment can have a short-term impact on the economy, a robust inbound tourism industry can help to mitigate some of this effect by providing a steady stream of income and contributing to economy stability. And that's why the reasons why inbound tourism matters. And we have to support all out in inbound tourism segment for the benefit of our business and for the benefit of our national economy. Happy Chinese New Year. Kongsi Kacang.